Hello and welcome to Halftime Report on CNBC-TV18. I'm Ekta Batra. Well, it's turning out to be a session where we are definitely seeing some amount of nervousness on the screen. At this point in time, we have the Midcap index, however, which is just about holding up. But nonetheless, we have a lot of top stories to track in this hour, so let's get going on that. Stocks slip as investors remain uneasy about the US-China interim trade arrangement and its implications for China, for India. Caution over the India-Pakistan conflict also lingers. Healthcare and industrials are the big gainers, while IT and financials drag. The US order on drugs calls for setting prices at most favored nation levels only for a direct purchase by patients from manufacturers, significantly diluting terms of the original draft and propping stocks. Hindalco slips after US arm Novelis withholds guidance on macro uncertainties after posting an inline quarter. Analysts, however, remain upbeat on the outlook for FY26. Block deals seem to be making a comeback with some cheer in the market. Paytm sees a trade of 4% of its equity, while KFinTech has 10% of its equity change hands. Hello and welcome to our Halftime Report, live from the CNBC-TV18 Motilal Oswal studio. I'm Ekta Batra. Well, it's turning out to be quite a good session in terms of the broader markets and a lot of the pharmaceutical stocks which continue to be in focus. The spotlight, in fact, is on the entire pharma space, which has actually seen some amount of recovery today after the executive order that came out last evening. Now, Trump, remember, signed the executive order to align US drug prices with peer nations. The mechanism is basically to let patients buy drugs directly at the most favored nation prices. Now, US drug prices, remember, are over 3 times higher than in other OECD countries. US funds 75% of global pharma profits despite being under 5% of the population. And Americans subsidize foreign discounts through inflated domestic prices, according to the executive order. Now, the impact, the reason why you're seeing a lot of the pharma stocks higher is because the executive order is not as binding as the April 2020 version, which was any which way blocked by courts. The order focused on patients who want to directly buy drugs from manufacturers. And around 8% of the population is not covered by any health insurance as per Macquarie. So the number of people impacted by this is around 8% favorably. There is no mention of Medicare or Medicaid channels in the executive order. The focus, according to the experts, is basically on big pharma and innovative drug companies. The aim is to equalize pricing of patented drugs available in Europe and Canada as compared to the US, because the prices are cheaper there. Aim is to eventually remove the middlemen in drug pricing in order to reduce the prices. And there is no direct fallout, according to experts, on generic drugs and biosimilars. As you can see in today's trading session, all of the stocks are reacting positively. The street will, however, wait to see the steps on import tariffs on pharmaceuticals. Macquarie has written on it. They spoke on Sun Pharma specifically, where they said that 20% of sales comes from their specialty drug business. 80 to 90% of the specialty drug business sales come in from the US. So it was impacted on account of the possibility of what could come out. And specialty drug Illumia has some amount of Medicare exposure. Now, with the executive order being benign, Sun Pharma has seen some amount of recovery, and Macquarie is of the opinion that the impact is not as much as anticipated.
All right, Ekta, take that point. That's about the pharmaceutical pack, which is the only pack which is actually doing well in a sectoral, way today. But we have a bunch of stocks which are buzzing around. We have Bharat Dynamics up 7.5%. So defense stocks, which had been doing well earlier, is now, coming back. So but that's one which is higher, and the others are as well in focus. But let's talk about Tata Steel that reported an inline set of fourth quarter numbers. The revenue impacted by drop in realizations across geographies despite rise in volumes. Nigel spoke with TV Narendran, who's the managing director and CEO of the company, started by asking him about the prices. Listen in.
Yes, prices have moved up a bit. In India, I think it's about 3,000 rupees higher this quarter than last quarter. That's the way we see the prices in India. In Europe, it's about 20 to 30 euros higher, in this quarter compared to the last quarter. So that's the situation that we see in both geographies.
Okay, coming to India then, Indian prices, as you said, they've moved up considerably. Now you have that safeguard duty as well, which will protect the domestic industry. My question to you is, the landed cost of steel is actually cheaper today. That is, the Indian steel is at a premium in comparison to the landed cost of imported steel. If that is the case, do you see this pricing sustain, or do you think there is a bit of a risk to pricing going ahead?
I think the pricing can certainly sustain at this level. Whether it goes higher depends on what happens in the international markets. I think the concern continues that China exports about 10 million tons a month. They exported that much in March and in April, and that certainly has a dampening effect on international prices. But I think when you look at importing into India, there is a risk of forex. There is a risk of material arriving 3 months later. You don't know where the prices will be at that point in time. So that's why imports are not yet significant. I think the safeguard duty has helped stem the flow a bit. And so we're looking forward to some stability in prices and some positive movement in prices going forward.
Okay, all right. What about the cost of coking coal? Because the cost of coal is another big variable that will help us determine what is the EBITDA per ton. So what was the cost in the past quarter? How much did it cool off from the previous quarter? And on an average for this quarter, what should it look like?
I think we're guiding that this quarter will be about $10 lower in terms of consumption, coking coal, because we got a lot of the benefit in the last quarter. So the drop in coking coal prices has stopped. It's stabilized. In fact, it's gone up by about $10, $15 in the last few weeks. But from a consumption point of view, we expect a consumption cost to be about $10 lower this quarter compared to last quarter.
Okay. You've guided for big savings in the coming year, sir. That's around 11,500 crores between various geographies.
Yeah.
What does it mean in terms of the profitability going ahead?
Yeah.
When does Europe move into the green? And for India, what is the rough EBITDA per ton we should work with for the coming year?
So if you look at Europe, as you're aware, we are in the middle of transformation, both in UK and in Netherlands. I think the challenge in Europe has been that we need to continuously transform to stay ahead of the curve. So in UK, a lot of the transformation is already underway. As you're aware, we closed the blast furnaces last year. We will have the electric arc furnace coming up in 2027. But in between, we'll be taking out a lot of costs. We've already taken about 230 million euros of, or rather 230 million pounds of fixed costs in UK in the last year, and we'll be taking out another 200 million pounds of fixed costs in the UK this year. So a lot of the cost saving is coming from that. In Netherlands as well, we are in the middle of a major transformation. If you look at the Netherlands numbers, we have actually swung from minus 450 to 500 million negative EBITDA to 80, 90 million positive EBITDA. So that's a 500 million swing in a difficult market. And we expect to move in that direction this year as well. So to go back to your question, I think we expect Netherlands to continue to be obviously EBITDA positive and get better as we go along because of the actions that we are taking. And if the prices move up, that's going to help us even more. As far as UK is concerned, we are pretty close to, break even as far as EBITDA is concerned. Some of these cost takeouts of last year will play out this year. So you'll see that playing out during this year. So we expect that this year, certainly Europe between Netherlands and UK will clearly be EBITDA positive. But there's still work to do there. As far as India is concerned, yes, the EBITDAs, I can't give you specific guidance on the EBITDAs, but certainly we expect this year to be better than last year.
All right. On Europe in particular, could you tell us by which quarter do you expect European business to move into the green? And you mentioned that UK as well is moving in that path. So when does UK turn positive?
Yeah. So I think Europe will move into the green from this quarter itself. Okay. But UK will still be marginally negative this quarter. And we hope in the next couple of quarters, we will turn green there as well. And we are expecting that UK will be green for the full year.
Okay. All right. So that's encouraging to hear then. Well, Mr. Narendran, tell us about the debt number as well, because there has been some release of working capital. So that's why we've seen it come down, I think, from around 88,000 crores. It's come down to around 82,000 crores. However, you have a capex plan as well that's underway. And I think last year it was roughly around 15,000 crores. This year, I think you're guiding for a similar number. So tell us, what is the capex plan for this year? And in an absolute number, where does the net debt head to?
Yeah. So I think the capex plan stays around the same, around 15,000 crores, because we will be completing the Kalinganagar expansion. at least the spends, a lot of the spends are happening between last year and this year. So that's on the capex side. Last year was a year where we were coming out of a difficult market, the peaking of the Kalinganagar capex, and not really getting the volumes that we were to get out of it because Kalinganagar was still ramping up. So we expect better cash flows this year, and we expect to bring down the debt. I'm not giving you a specific number, but we will certainly bring down the debt during the year.
So net debt number at the end of FY26 will be lower than FY25. Is that correct?
That's correct.
Could it be $1 billion lower?
Well, that's what we are always chasing, but we are still some distance away from that, but we are working on it.
All right, Mr. Narendran, we cannot wrap up any conversation without talking about the man of the last few months, Mr. Trump. These tariffs, is it impacting demand? How do you see things panning out? China, as you said, they continue to export, which is putting pressure on the globe on the whole, the global ferrous industry. But because of these tariffs, what kind of changes are you seeing both on the supply and demand side?
I think what it has done is obviously provoked everyone to look at themselves. So if I look at Europe today, Europe is looking at how can they work in an environment where they can't depend as much on the US as they did in the past. So you see a lot more positive thinking in Europe about manufacturing, about investing in defense, etc. So over the medium to long term, I think it's positive for Europe because they will spend more in Europe, whether it's what Germany has already announced and whether it's about the other countries planning to spend more. So there is a medium to long-term positive impact on Europe because I think manufacturing will get a boost in Europe. But having said that, in the short term, of course, we are dealing with these tariffs. UK has got into an understanding with US, so we don't see the impact of that. We don't see a negative impact of the Trump tariffs because UK has got itself a deal. But as far as EU is concerned, they're still negotiating. About 700,000 tons of steel goes from our Netherlands operation to Europe. To the US. Some of those steels are not made in the US. So to that extent, our customers in the US are also struggling with these tariffs. And part of those tariffs will obviously get passed on to the customers there. But that's a discussion we are having. We're also waiting to see what the EU government and the Trump government concludes in their discussions.
Final question, sir. For the India business, what is the volume growth you're looking at for this year? And also on ground, demand is as strong as you expected?
Yeah, demand has been quite reasonable. I wouldn't complain much about the demand. In fact, it's because the demand has been strong that Indian steel producers have managed without exporting much, because international prices are not great and export markets are not really attractive. So from that perspective, I think the Indian demand is holding up okay. It could be better, but it's not too bad. So this year we are expecting about 1.5 million tons more than last year. We have another blast furnace relining coming up in Jamshedpur, and that's why we have some loss of volume in Jamshedpur because of that. But net, we should be about 1.5 million more this year compared to last year.
All right, 1.5 million more this year when it comes to volumes for India. This year, that's the word coming in from the management at Tata Steel. Meanwhile, before we slip into a short break, a couple of stocks that notice mention or required mention. We have the Midcap index, which has moved to the high point of trade, 0.2% in terms of gains. Allied Blenders, that's the one which is up about 6%. We're also seeing some traction in Latravenues Tech, which is basically the owner of Ixigo. Travel and tourism stocks have been doing well for the last couple of trading sessions. So we've moved higher on that one. Rallis India continues to see some gain, up around 6%. And finally, we have Zaggle Prepaid. This is up 7%. This morning, we had the management join us here, talk about their growth guidance for this year. At the same time, look at margins around that 10 to 11% mark in this year itself, with management saying that they may perhaps look at buying stake in the company as well. Take a short break, and as we do that, let's give you some programming notes. CNBC-TV18 and HSBC India are back with Season 2 of the SME Championship Awards. This prestigious platform celebrates the SMEs that are pushing boundaries, making an impact and shaping the future. Nominations are now open. You can do that by scanning the QR code and submitting your entry for the SME Champion Awards Season 2.
Welcome back. You're still tuned into Halftime Report on CNBC TV18. Well, let's talk about a specific company now. Boris Renewables is the next management on the show. It reported what was a good set of quarterly numbers. The sales volume came in healthy. To discuss more, we have with us Pradeep Kheruka, who is the Executive Chairman, Boris Renewables, joining in now. Mr. Kheruka, thank you very much for taking the time out. Well, you know, what stands out is the EBITDA recovery, which has taken place year on year. EBITDA of around 15.5 crores versus a loss on a year-on-year basis. Can you tell us what led to this turnaround and what is your guidance? Okay, I think...
Sorry, I was muted.
Yeah,
Yes.
go ahead.
Actually, the EBITDA turnaround has come principally from higher prices. We have been selling in the past at a very, very low price, trying to match the dumped prices coming from China, which were selling well below the actual cost of production, even for them. And the other thing is also a growth in volume. So we've achieved a growth in volume as well as a growth in prices.
Right. How much have been the growth in prices? And if you could tell us what the current prices are versus the previous quarter so that we can get an estimate on how the EBITDA run rate will be. Because you've gone through the cycle of the downside and now it is looking up. So are the current quarter prices better than what they were in the previous quarter? And to that extent, what's your EBITDA uptick likely to be this year? If not this year, at least the first couple of quarters where you have visibility?
So I'll tell you that the EBITDA uptick is looking better for the current quarter. The last quarter from January to March was a time when we'd just gotten the provisional duty announced
Yes.
in December, and then we were increasing prices gradually. You can't do these things abruptly. We are now pretty close to the minimum import prices, which have been declared by the government. And so EBITDA currently is higher than what it was in January, March. So EBITDA should do well. We are also producing and we are selling. There's robust demand for the production. So at the moment, everything is looking like it's on track.
What's the absolute pricing right now? Because I remember you had said that 56,000 per ton is a fair price as seen by the Government of India. Imports that time were close to 28,000 rupees per ton. This is as of November, December that we were speaking. Now, currently, what are the prices at?
The current prices are nearly at the rate of EBITDA, nearly at the rate of the imported price, which is about...
Sorry, how much is that?
About 154 rupees per millimeter. Sorry, 54,000 rupees per ton. My apologies. 54,000 rupees a ton.
Okay. All right. So, you know, just wanted to focus on the European market for a bit. We do understand that there's been some amount of demand pressure in the European market. Can you just take us through what the current scenario is and what is the dumping like which is taking place from China?
So the European market, I can share my knowledge and information with you. You see, for the last calendar year 24, the Chinese dumping had reached unprecedented levels in Europe. They were dumping modules at an alarming rate, at alarming prices. Now, this did show that the installation in Europe went up to 65 gigawatts during the year, which is a very high number. And but most of it came from China. And Europe had very little to do with this installation. In fact, the module manufacturers, the leading ones, all shut down. This sad state of affairs was because of a political problem in Germany, and that led to elections. And now the new government, which has just been sworn in, has already announced that manufacturing of solar products in Germany is very high on their priority list. And part of the deal that they have struck with their coalition partners is $100 billion of investment in solar. So that's a very strong number. And the European Union Parliament has mandated that with effect from the 1st of January next year, 40% of all installations must come from European manufactured modules. So all of this portends very strongly for a resumption of production in a very big way in Germany and in the rest of Europe. This has already been activated in Italy and in Austria, and demand from these two countries has surged, which has led to a reasonable resumption in the manufacturing of solar modules. So right now, what we are doing, we are looking at sourcing annealed glass from outside and tempering it and processing it and selling it in Germany and elsewhere in Europe, which will reduce the loss numbers that we are currently seeing. And hopefully, with the new government having assumed office last week only, soon enough, there should be a proper program to sponsor and to relaunch production in Europe. The moment that happens, we are the only solar glass producers in the entire European Union.
Right.
So we'll have the first count on that, and I don't know if it becomes very good. We may even have to double our production there.
So operationally, what is the loss that you make in your Europe subsidiary right now? And does it break even in the next couple of quarters so that we get a swing factor? What's the kind of EBITDA that is expected from there?
You see, we are losing a lot of money. We're losing about nearly 800 to 900,000 euros every month right now. But hopefully from July, we should see a downturn in that. If we start production of tempered glass there based on imported glass, then that should reduce the EBITDA loss. That should reduce the loss by more than half. And the moment we have a little more firm news about resumption of production, then that will cause hopefully the loss to go away and maybe even some profits to be seen.
Okay. But what about profits on a blended basis? While your margins have done well, and considering that you do have these variables coming in from Europe, what can you guide on the bottom line for the year?
That's quite challenging for me to give any guidance on the bottom line for the year, because even when we were looking at anti-dumping duty, I was quite sure, I was very positive that it's going to come, but it did come as a provisional duty in December, and then we had to wait virtually till the last date when the final duty was announced. So right now, at least so far as India is concerned, the duty is final, and it is there till the 5th of December 2029. So for the Indian operation, it kind of gives us a clear runway ahead on what needs to be done, and we'd already taken permission from the board to step up production by 500 tons per day. Now, when I'm looking at the equipment which is available, maybe we could aim for a little bit higher production than 500 tons per day. But since so far the announcement in the board and the stock exchanges is 500 tons, I shall not go beyond that today in my conversation with you until this is being made public. And then, then it becomes public.
Take that point. So you are for sure going to increase your productions by 500 tons per day, and it could actually be more than that as well, which you will apprise the exchanges of. Final question, during peak periods, your margins were upwards of the 20% mark as well. We've seen that move to around 4% with the European losses coming down, with the Indian prices increasing, and now you have this certainty of, duty regime over the next 5 years as well.
Yeah.
Do you see them trend towards those levels, at least in the second half of this year? Is that a possibility?
We look, this is a forward-looking statement that I normally do not make, but in this case I shall. And I would say that an EBITDA margin hovering around 30% is something that I cannot disclaim.
Okay. 50% is what you said, huh?
No, 30.
30%. Got that. Take that point. Thank you so much, Mr. Kheruka, for joining in and giving us those details. The next year looks good for you, and the year after that as well, perhaps even better, with the European loss-making operations turning profitable for you. The stock holding up fairly in the green. Take a short break. Come back on the other side. We talk trade with Sachidanand Uttekar of Trade Bulls. We spoke about a couple of broader market stocks. Just keep an eye out on Paradeep Phosphates. That's one which is surged right now. Keynes Tech is the other one, which is up 5%. And another one which is spiking from the lows of today's trading session at the high point is Vishal Mega Mart. Reported a good set of numbers this time around. Value retailers have been doing well this quarter so far. And Vishal Mega Mart is one of them, which is up around 3.5% right now as we speak. But good time to look at the F&O setup of the day. You have to divide the indices in two parts. One is the indices which are seeing profit booking after a big rally yesterday. So this is Nifty as well as the Nifty Bank. The good part is they're holding on to important levels. The Nifty Bank went just below that 55,000 mark today, has recovered from there, holding above that. And we have the Nifty, which is holding around to that 24,700 mark itself. Though we're seeing strong outperformance in the pharmaceutical space, Ekta told you why, and we have some traction in the mid-cap end of things as well. And if you look at the advanced decline ratio, the portfolios might be feeling a lot better no matter the state of the Nifty right now, because we have nearly 2 stocks gaining for every stock which is declining. On the way up, however, after a big rally that we saw yesterday, maybe some bit of cool-off was warranted, and that's taking place out here as well. 24,800 call writers, fairly active, telling you closer to 25,000 we might face some supply. As is the case for the 24,900 call writers as well. They're fairly active as well, and these are options that expired this Thursday. So 25,000 thereabouts could be some supply. At the lower level though, support has moved higher. Remember, from 24,000 we moved all the way up to 24,900 yesterday. The earlier resistance of 24,500 will now stand as strong support. Why do I say that? Because you have the 24,700 put writers, which are fairly active, pocketing a premium of nearly 200 rupees. The India, put call ratio for the Nifty. Yesterday we had pointed out that at 1.2 is slightly overheated. Now it's cooled down to around 1 itself, and that is supportive of a rally in the market in the near future. We have BEL, BSE and IIFL Finance, all of them seeing a lot of long positions being added. But on the other hand, we have UPL, which reported its numbers during markets yesterday. Street not very happy with those numbers, down 5% today. A big surge in short positions out there. Ekta.
Okay, all right. So that's on the F&O space. Thanks, Mangalam, for that. Sachitanand Untikar joins in to discuss what he's targeting and what his strategy is today. Sachitanand, thanks very much for taking the time out. Well, it is definitely a down day, but let's start the conversation with the positives, which is the entire pharmaceutical space, which is buzzing around. What is your call?
Good afternoon, Ekta. Good afternoon, Mangalam. Clearly, I think there has been a very strong price action when it comes to Nifty Pharma. The expectation was that there are signs of consolidation, but looking at the news flow, the anticipation was that there could be a breakdown. But if you look at the price action closely, even yesterday when we saw the Nifty breaking or surpassing that 11 days of consolidation, we saw a very strong recovery from Nifty Pharma itself. I think the base at around 21,000 was well maintained. And if you look at the daily chart, it exhibited a bullish hammer formation, which is again a very strong sign of a reversal. So I think going forward, we may see Nifty Pharma itself scaling towards 23,000 levels. The base which it maintained in yesterday's trading session at around 20,500, I think that particular base may not be violated in this particular series itself, and we may see this particular rally getting extended towards 23,000.
Okay, what about other stocks and strategy today?
Well, the focus is on stock-specific action. If you look at the Nifty, we are firm with a view that Nifty could scale towards 25,180 during this particular expiry itself, and that's why we are continuing building long positions here. Even right now, the pullback is very meaningful. One can keep a stop loss at 24,580 on a closing basis and try to add more long positions. We are expecting that this particular decline may extend towards 24,640, 660, which will be an ideal level to add more long positions when it comes to index. On the stocks front, there are a lot of stocks which are showing consolidation breakouts, base building breakouts. So one of them is LIC Housing Finance. Now, if you look at the overall structure, for the last 5 months, the stock was consolidating. It was forming a rounding bottom kind of a formation. The neckline of this particular pattern was placed somewhere close to around 600 levels. But if you look at yesterday's price action, we saw its 200-day exponential moving average plus its 50-weekly exponential moving average, which is placed at around 595. This particular level was breached with a gap. Since then, there has been long additions which are seen in this particular counter, and that's why we believe that there could be further momentum in this counter. Keeping a stop loss at around 607, one can accumulate this particular stock for a pattern target of around 660. The trading target is placed around 642. The second counter which has come up on our radar is Concor. Now, even here, after almost 6 weeks of consolidation, we are seeing a very strong OI breakout at around 700 levels. So probably we may see further elevation in levels. The momentum can extend towards 746 on an immediate basis, but the positional target is placed somewhere close to around 780. So it's a consolidation breakout, and that's why we believe that the moment the stocks dips below 684, this particular pattern will be void. So keeping a stop loss at 684, long positions are recommended in Concor. Post target would be around 746, positional target would be around 780, and a disclosure would be that we have recommended this stock trade setup to our clients as well.
Important milestone achieved for Concor as well, because the Western Dedicated Freight Corridor has been completed. We have seen some notifications coming in from the government, so that's the fundamental part. Sachi, thank you so much for joining in and giving us individual stocks and index trades. Take a short break. On the other side, we have the management of Chalet Hotels joining in to discuss their fourth quarter numbers, which was a good set. Welcome back. Metro Brands is another one which is up 4%. So a lot of these holiday stocks as well as consumption stocks doing fairly well. Good news, flight operations have resumed at Srinagar Airport, so that does well for all the travel and tourism stocks too. Speaking about travel and tourism, Chalet Hotels reported a very good set of fourth quarter numbers in line with how the industry has performed so far as well, a tad better if you must. The revenue and margin came in fairly strong. Average room rates increased by 21% as well. So to discuss this and the demand picture going forward, we have Sanjay Sethi, who's the MD and CEO of Chalet Hotels, joining in. Thanks a lot, Sanjay, for joining in. Always a pleasure speaking with you. Good end to the fourth quarter, or rather good end to the financial year. Question is, what are you targeting for this year when it comes to revenue? And if you could break that up for us in terms of, increased occupancy, increased rates, and at the same time, increased revenue coming in from your real estate vertical or annuity business, which is margin accretive.
Sure. Mangalam, always a pleasure back being on the channel with you. Thank you for having me. Look, we've had a very strong quarter four. It's been record-breaking on all parameters. And it's in line with what we've been saying, that the industry continues to have tailwinds for the foreseeable future. And on the macro front, I see 3 to 4 years continue to be very strong, where demand will outpace supply. And therefore, we'll see some small occupancy improvements in stabilized hotels. But more importantly, we should see rate improvements going forward. The current situation in the last couple of weeks obviously had us a lot concerned. We took contingency steps to freeze costs and watch the monitor the situation very closely. We also worked with the local authorities in helping whatever we could. It's always nation first for our team at Chalet, and we sort of followed that. Going forward, I'm hoping with the way things are, and I cannot confirm that, but if things continue to settle down from here onwards, we believe business for June will be back to full pace. In May, we've lost some business. So whilst April did well, May we've had some hit some losses and cancellations. So far, June looks strong. Having said that, and having said that May we saw some cancellations, we've still grown at 12% over the May of last year. So the growth is still on. And we believe that we will see double-digit growth on existing hotels. And as we add new hotels, the inorganic growth will start kicking in very sharply. The office assets are moving into fruition and leasing activity very quickly. We've had an exit rate of 21 odd crores in the month of March. And I think this month onwards will probably be at 25 crores, which means 300 crores of rentals from the office assets and around 95% flow through from those rentals. So they will assist us. Hospitality continues to be the largest part of our business, which we now have in two segments, which is leisure as well as business hotels.
Okay. Mr. Sethi, I just wanted to touch a little more upon the cancellations that you faced in the month of May. and the impact that you've seen. Can you quantify that for us? See the percentage of cancellations and what might the impact be specifically in possibly properties that you have up north?
Sure. So the leisure hotels obviously saw cancellations of MICE movement because it was very uncertain last week. We hope that some of them will come back because they've not all canceled, they've actually pushed back the dates. So we expect them to come back and maybe subject to availability, it'll help us grow the business going forward from this what we lost here. As I said, we are still, despite what's happened in the last 2 weeks, as of 11th of, as of May, 12th of May, we are 12% over last year for the first 12 days of May. We are still shy of our targets by about 6 to 9%, but it isn't by any imagination a massive hit.
Got it. You know, just from a growth standpoint, I remember, Mrs. Sethi, you have been earlier saying that FY26 is a year where a lot of your assets will come on stream. FY27 is where one should see growth. So I'm just plugging in some of the numbers. You have around 3,300 keys right now with about 1,250 under development. So that's an immediate 30% push through when it comes to capacity. Even your, annuity assets should increase by about 10 to 20% over and above what they're doing right now. And FY25, you ended with revenues of close to 1,700 crores. Assuming you do 2,000 crores, basis what you've been talking about in FY26, are we looking at numbers close to 2,500 crores on the top line with 40% plus margins in FY27? Would there be a fair estimate?
So we don't give forward-looking numbers, but I would say your numbers are not too far off. We have our own assessment of the situation. We believe we'll do better than that.
Right. So 2,500 crore is achievable by FY27 with 40% plus margins. Also in your balance sheet.
We have delivered 46, 47% margins now. So it's not just 40% margin, it's north of 45%. And as office assets mature, the margin will also improve.
I was just being a little conservative out there, given the sort of operations that would come by and, all those assets requiring some of the investments, etc. But 45, 46% is what the street will take. What about your balance sheet? You had delivered a little bit because of the funds that you raised via QIP, sub 2,000 crores. But then thereafter, you made an acquisition of Western Himalayas, which added about 500 crores to your debt. So where does that picture stand at right now in terms of net debt? And what's your deleveraging plan?
Yeah, net debt is a little shy of 2,000 crores. We've taken enabling resolutions for raising 1,000 crores sometime in future, but those are only enabling resolutions to keep our gunpowder dry for further growth activity. Most of the pipeline that we've announced, in fact, almost all of it, will be serviced by internal cash flows. But if we get some opportunities going forward, we'd like to keep the balance sheet in a situation where we can actually activate some of those. Our overall goal is to go north of 5,000 rooms in between pipeline and operating hotels. Okay. And we expect that to get through that in the next 4 to 5 quarters.
All right. You do have 2 properties, one in, your Western Hyderabad as well as your Khandala property. When exactly does that start reflecting in terms of your P&L?
Western Hyderabad is already operating. It is Western Himalayas, which we acquired on I think around 10th or 12th of February. So it is reflected for about 40 plus days in the last financial year. But this is a ramp-up property. The occupancies are in ramp-up phase. The average room rates on that property are very high. They're currently hovering around 27,000, 28,000. Occupancies at about 43 to 45%, and we believe they will stabilize at about 60% going forward. On the Duke's Retreat in Khandala, we have 73 rooms operational, but we didn't have a banquet hall ready. That's getting ready by end of this month. And with that and the expansion on rooms to 145, we expect this property to really kick in from October of this year.
All right.
All right, Mr. Sethi, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's Shali Hotels. That stock is down around 0.5%. Yes, they did see some amount of impact on account of the geopolitical tensions in the past week odd, but nonetheless, on a year-on-year basis, the month of May is still up around 12%. So that's important to note. We need to take a short break, but on the other side, we'll get you more on the market. Stay tuned.
Network 18 decimates Times Internet with over 6 times more unique users on social media. Network 18, the undisputed leader of news networks, way ahead of the times.
Welcome back. Well, before we just get talking about the currency space, just want to point out Lupin because they have launched the tolvaptan tablets in the US markets. It's a big drug for them, around $1.5 billion in terms of market size. And 180-day exclusivity is what Lupin has. That stock is higher on the back of that particular piece of news. Factored in, but nonetheless, they finally launched it in the US markets. But Tuesday has seen a strange case of all-round rise in key currencies. The rupee is 0.5% higher versus the dollar. The yuan has also climbed sharply versus the dollar for the second day. But the dollar index is higher against GS currencies. Lata is here for a roundup on what's taking place. Lata.
Well, there are actually multiple forces rocking the currency market. The rupee is higher because it didn't trade yesterday. So it's actually, versus its Friday close, it is tracking in the de-escalation of the last 3 days. And, on Friday, it had touched a low of 85.80 also. And now it is almost 1 rupee cheaper to buy the dollar. It has gone up to, 84.80 and more. So a 0.5% gain in the rupee because it is giving you 3 days of appreciation. And that's largely because of the de-escalation in the war. For the yuan, it has been 48 hours of a climb. I mean, just imagine what the yuan's plight was all through April when there were zilch exports to the US after the reciprocal and the 145% tariffs were announced. So yuan fell all the way to 7.33 to the dollar. And now suddenly there is a gush of exports after the weekend tariff reduction. Expectation is that US importers are going to import like crazy, practically for the entire year. And therefore, that is getting factored into the yuan. It became as strong as 7.18. And I think it was Goldman Sachs which put out a report saying that it will go even to 7 yuan to a dollar because of the aggressive exports that is expected out of China. And the dollar in its own way has been rising, not so much against Asian currencies, but it has been, the DXY is more pitted against the G3 currencies. So it's more Swiss franc, euro and yen. You've seen the dollar appreciation because it had depreciated a lot. And now it looks like the worst of the US trade tariffs are already factored in. Now, if anything, the news is incrementally better. Already a UK deal signed, a US-China pause signed for 90 days. That covers, more than 6 months of this year. And therefore, the dollar is now appreciating against the G3 currencies. All told, let us prepare for a very rocky period for currencies, whether it is the dollar or whether it's Asian currencies. The larger expectation is that Asian currencies will be on an appreciation trend.
Right, Lata, thanks a lot for that. All-round rise in currencies is what we're seeing. Speaking about currencies, we'll take a short break, come back on the other side. We speak about commodities as well. Manisha Gupta joins in with Peter Maguire of Trading.com. Stay with us. Well, it's a party at the mid-cap end of things right now. Even though the index is mildly off highs, when we started about 15 minutes ago, we had the mid-cap index seeing a gain of 0.2%. Now it's come down to 0.3%. But that's not stopping a few stocks. We have Star Health, which has moved to the high point of trade. A 7% up move is what we're seeing out there. TD Power is the other one, which is again up around 7%. And Bharat Dynamics as well as Bharat Electronics. We've seen a rise in defense stocks. Look at the double-digit rally that we're seeing on Bharat Dynamics right now, up nearly 10.5%. And Bharat Electronics as well is the other one which is doing well. But that's about the equity space. We do have all things commodities coming in with Manisha, who's joined us in the studio. Manisha.
Well, thank you so much for that. And joining us on the show also is Peter Maguire. He's CEO at Trading.com. Peter, hi. What interesting last 24 hours have been. Well, that's really been the case for most part of 2025 till now. But the US-China trade agreement, even if temporary, even if for 90 days, has had knee-jerk reaction coming in for many of those commodities. I first want to start with the gold prices, where we did see 3% of decline yesterday. It's trading 0.5% on the higher side right now. How are you reading this price move?
Well, good afternoon, Manisha. I mean, what we've seen has been dynamic. And as you highlighted, off 100 and now it's back up a little bit, 32.58 at the moment. I feel as though that's probably going to, it was oversold and it's just incredibly volatile. We had, days last week, you're up 100 and now it's down 100 in a session. So that just demonstrates, I think, you've got US dollar, you've got what's happening as far as the trade talks and that agreement and, the 90-day period for it to be worked through. And that US dollar index has had a big run up. So, yeah, that's naturally the heat came out of gold. But, you had to be very focused yesterday. NASDAQ was up nearly 4.5%. And all the Asian equities were well bid up as well.
Oh, well, absolutely. So what's your sense on gold prices now? Because all kind of news, and we've seen gold prices perhaps factoring that in, but 3,200 to 3,400 really seems to be becoming a narrow range for gold prices. How do you look at gold for this quarter now and until the end of this year?
Well, first off, I wouldn't be surprised to take another little bit of, more heat to come out of it just in short term. And when I say that, we could see another 100 stripped out of it. You may not. But I just feel as though that US dollar seems to have very strong momentum. It could take a 102, 103 because it was at 102 only a matter of probably 12 or 15 hours ago. And now it's given up some of that. A bit of hot air's come out of that as well. You're running, the best part of that, 101.60. By probably end of quarter, and we're halfway through, Manisha, I'd say I wouldn't be surprised to touch a 34 or 3,500, 36. And then by end of year, well, I think it's got the capacity, probably 4,500, as, Goldman's have stated. And, we're not going out on a limb. It's probably, that's where all the brains trust is working together, and they think that number's achievable.
Peter, also, how would you look at silver? Because yesterday it fell with gold, but today it seems to be rising with gold and base metals. Do you see a slightly confused silver market right now?
I think, if I look at the industrials, copper, aluminium, zinc, tin, they're all up. Tin had a good night. It was up, best part of 2.1, and aluminium up 2.6%. Silver, it's bid up, and the gold to silver ratio is way out of kilter. So I think that there's plenty of upside yet for silver, as we keep on saying. It's 33.20 at the moment, 33.25, and the critical shortage as far as silver globally, and the underinvestment across the whole sector over the last couple of decades. So that's the one to keep a very close eye on, and I think that's best days are certainly ahead of it over 25, Manisha.
Peter, I remember you saying that 38, even 40 is a possibility in this year for silver. Are you staying with those numbers?
Oh, I think that'll be on the low side. I think it'll be well through 40. I think you're running at 33 now, and as gold continues to climb, it'll take silver with it, and when it rolls, it's going to be game on, because the overall momentum, I think that's where everyone will be stacking positions. Big interest as far as physical buying from the retail land. And of course, when the paper market, people will just be, game on.
And do you see also game on in some of these base metal prices? Because copper definitely is seeing some support, but even more coming in for aluminum and zinc.
Yeah, copper 95.20, aluminium still, I just can't see to get, aluminium, it's still under 2,500, Manisha, nowhere near that 3,000 handle. Zinc's nearly at 2,700. That's got a little bit more momentum to it. So I think that they'll both edge higher naturally over the next couple of months leading into that, 90-day decision as far as what Treasury Secretary Scott Bessent said, as far as the trade talk. So, over the summer period, I think, those industrial metals will trend higher.
Right, we take that point. Peter, incredible insights on the precious metal space. And I heard the word game on a couple of times from you. You spoke about silver, you spoke about gold. But for me, the true diamond, Virat Kohli, decided to hang his number 18 white jersey. He's one of those who, Australians would say he's the best Australian that we know of outside of Australia. You want to chime in on that?
Well, yes, Mangalan. When you think about the might of what he was truly a legend. And, these things happen. Not everyone plays forever, and no one does. And we wish him well in retirement or wherever that takes him.
And you're chuffed about him not playing the next Border Gavaskar Trophy?
Yeah, well, we're going to let you guys have a chance. That's all I'll say.
I think the next 3 trophies would be ours itself. Let's put it out here on national TV and let's see how that goes. But until then, good luck for the World Test Championships that happen.
Thank you very much. May the best team win.
And the best team being New Zealand, or?
Oh,
All right, Peter, that was a great conversation. Manisha, any word on precious metals, or would you like to chime in with your expertise?
Well, may the best team win.
May the best metal win, as per Manisha. All right, with that, we'll wrap up on this edition of Halftime Report. We've had our bellies full with conversation right now. But on the other side, you have Business Lunch, taking all the market action ahead.